Why are the Chinese big tech companies like Alibaba and Tencent and Meituan selling off so much? Well, it has been quite an interesting trading day so far, so let's talk about some stuff that I talked yesterday in my video about how to manage risk, particularly in Chinese stocks, and also some predictions that I made about different sectors and what's going to happen. And then I will also try to teach you some basics around the Chinternet, the Chinese internet, and the ecosystem between Tencent and Alibaba. And then I will give you my insights and also judgment and whether or not I made any trades and in which stocks today. Before I do that, please smash a quick like button because these videos take quite a time to research and put out there. So if you appreciate this content, then please help to share it and spread some love. And then also meanwhile, please make sure to subscribe to the channel and hit this notification button. I have gotten comments from Twitter that some people mentioned that they don't get my videos pushed to the front page, and that can happen if you don't make sure that this bell button is activated. So please make sure to do that, otherwise you possibly miss out on content like this. First, let's start with something that I'm kind of embarrassed of putting out there because lots of China or perceived China experts are actually using that, and sometimes it's used in a wrong way and so on, but lots of people actually really like that, which is about the word crisis, or we're now in a tech crisis, right? And in Chinese this word means, or literally translated, is 危机, and it consists of two syllables here, as you can see, and the first syllable 危 can be found in the word 危险, so that means danger, and then the second one can be found in 机会, which means opportunity. So you could actually kind of say that in the crisis there is two meanings, which are danger as well as opportunity. So that's kind of, if we look at the stock markets, what is it all about? Yes, there is danger with the big tech sell-off there, but at the same time there might be opportunity and there might be misalignments in the stock. And before I dive into those stocks, maybe some new viewers of the channel may be wondering what the name Dongxi, the China opportunity, is all about. And Dongxi literally translates into things, and it also once again here consists of two words. The first one is Dong, the second one is Xi, and Dong actually means the east, whereas Xi means the west. So yes, our name here is a play on the words combining the West and the East, and literally want to bring them together with the things that we're doing. And so I think that's enough of Chinese class for today. Let's jump into the stock market. So first of all, we see some of the biggest drawdowns today actually in the bigger tech names like here. So this one here is Meituan, then we have Alibaba and Tencent, which are almost all down around 10%. And have been hit much harder than, for instance, here NIO, Tiger, which has almost recovered intraday. So Tiger was trading way more down this morning before, and has actually made its way up back over the support level here. SEP is green today. Xunlei is green based on some interesting developments in the crypto world there. So it's still trading in sync pretty much with lots of the Bitcoin movements and the crypto movements in general. And as you can see here, this wedge pattern is going to be quite interesting, but that's not so much topic of today. What is more interesting is which stocks have actually been beaten down a lot, and that's, for instance, Beike, which I actually mentioned yesterday, that there might be issues in the housing market in China, and that this might be a sector which gets regulated a lot, and actually today more than minus 20%. Pinduoduo, I also mentioned that this one might be one more of the risky plays in China because of the group buying mechanism, which they are pretty much relating to. And then one more interesting finding here is about Futu in comparison to Tiger. So yesterday I also mentioned that Futu is actually much higher valued, so there is much more risk in this stock in terms of the valuation risk, because there might be people who want to take some of those profits, and also the upside is not so much high anymore in comparison to, and that's why I believe Tiger is not beaten down as much. Tiger has a much more comfortable position there when it comes to the valuation, and so this shows now in the stock movement today, in my point of view. And I'm also glad, of course, to see that NIO is holding up quite well at this support level here right now, and that possibly has to do with the NIO gang. First of all, smart buying the dip here, and then also investors realizing that the automotive field, as I have mentioned yesterday, isn't that much at risk as other sectors here, for instance, like e-commerce and so on. But let's go back to Meituan, Alibaba and Tencent, the big ones. Why are they selling so much off, and which one may possibly be a buy or that I actually bought today? So early this morning I made a post in the Patreon community around Meituan, for instance, because there was also some news coming out, and this one is the Bloomberg news that Meituan dives 15% after China issues the food platform curbs. And so once again, really bad news and frightening news, right? And another perceived crackdown here. But what I'm doing here is I'm actually looking at the original post coming from in Chinese from the State Administration for Market Regulations, SAMR. So that is the original source and not relying here on what Bloomberg is reporting. And actually, if you read through it, it's basically that they're urging Meituan that they should actually adhere to the current regulation regarding the minimum wages, that they should pay attention that the drivers are not working too many hours, and also that they don't get too many assignments which they can actually not really fulfill. So they're taking off pressure on these workers, and so basically also enforcing some of the existing working rules there, but also in additional making sure that nobody is getting exploited there. And that was now translated into the news that this is terrible news for the business model, because in fact I do think it will have an impact on the bottom line, at least short term. I think, of course, if they can have less efficiency in the system there, because for instance they need to give more breaks for the drivers and so on, that may have higher cost as an effect for Meituan. But there's also positive stuff I found in the article, and I think actually Meituan might be one of the platforms in China which is really well positioned in order to actually get compliant with those terms. And also I think ultimately it may actually be good for the business of Meituan. But first, the good news here is, and this is roughly translated here by Google Translate, that they also want to promote installation of smart dining cabinets and so on, and wearable devices, such as smart helmets and so on. So that is also interesting to see, because this really shows you what actually the government is thinking. What they want to do is that they want to use technology in order that the huge tolls on some of these workers and on society in general is actually getting less. So for instance here, these smart dining cabinets and so on, this is referring to something like, for instance, automated logistics like robot delivery, but also, for instance, you see that already today in hotels in China where you have little robots delivering a meal and so on. And so why I think this note by the regulators here is not entirely bad news is if you combine that with recent news that Meituan actually raised $10 billion for a war chest for drones and self-driving cars. This means that Meituan is actually already executing on that, maybe in some ways replacing some of the drivers, or additionally giving them technology that helps them to better fulfill their jobs, and also easing some on the transaction limits and the pressure there through technology like those self-driving delivery vehicles as well as drones in the future. So who else than Meituan can actually execute on something like that and respond to this law and regulation by deploying technology? I think this is one of the most bullish prospects actually of this company, that they are really well positioned and in the best situation that they can possibly be right now with this new regulation, that they can actually set off some of the additional costs that they may have by being compliant to these new laws, but now they can actually possibly have better margins in the end and lower cost, because they will massively deploy this technology, which is actually wanted here by the government, and that could actually have even some side effect, because as they are also mentioning wearable devices here such as smart helmets, this may actually be even an opportunity there for someone like Zepp Health, which is really focused on producing wearables. They have all of the R&D and technology and know-how. And how I know the Chinese, they're really fast at executing at such new business opportunities. There will be now maybe more than 100 companies in China rushing into developing those wearables that can be deployed with Meituan as the biggest customer in helping people delivering more food at a lower toll to the societal pressure and to these drivers there. And so maybe it doesn't have to be, but it could be even SAP Health that is benefiting from such new legislation there. And so I see also opportunity in this bad news here, and that's why today I used this dip and added more to my Meituan common stock and kind of expanding my position there. So why has Tencent and Alibaba dropped so much in comparison to some of the other stocks that I've just mentioned in much smaller companies, much more volatile stocks like NIO and Tiger? And yesterday I mentioned actually that, for instance, Alibaba, in which I'm personally not holding any position, that they are actually not so much at risk from the, let's say, the China risk, the perceived one, which is around in which sectors they are active, but also on the valuation side and also on the execution side of the management. Actually, that's not too much of a risky stock, and also the valuation has already come down quite significantly. So what could be another issue there? And well, I think possibly it's some of the investors may not be as well educated around China and may have actually sold off because of this pressure of all of the bad news in the media, and also because they are simply the biggest companies there. So maybe larger pension funds are also trying to minimize their risk there. But then there is some additional regulation that came out today, which was about China launches a special campaign to regulate its internet sector. And what they are talking here about is actually right targeting at Alibaba and Tencent. So that they're saying they are now launching a special 6-month campaign to regulate the internet industry. So this one is coming from the Ministry of Industry and Information Technology, MIIT, which is quite important. And then they say they want to target problems that may disrupt the market order, damage consumer rights, or threaten data security. And the ministry will crack down on malicious internet company practices that disrupt the market order, such as, for instance, link blocking activities and interference in products and services operated by other entities. So here I want to give you first the macro picture again. And for that I'm using a slide that we oftentimes also show to our consulting clients. And well, here it's in German, but never mind. It is basically about what you see, this big red bubble is the so-called Chinternet, right? It's the Chinese internet, which is here a walled garden in terms of that. All of the Googles, Facebooks, Instagram, WhatsApps, and so on, they're all beyond the firewall here. They don't have access to this ecosystem here, which is the Chinese internet, which is basically divided between the two big giants, Alibaba and Tencent. And so on the Tencent side, you have WeChat, you have WeChat Pay, you have e-commerce, which is Jingdong here, and you have on the Alibaba side the big social media, which is Weibo, something similar or a combination between Facebook and Twitter. And then you have the e-commerce platforms like Tianmao, so Tmall Global, Taobao, Xiaohongshu, which is heavily invested by Alibaba, and as a payment you have Alipay. And so I have the experience of launching an e-commerce app into China and also trying to sell German goods into this so-called Chinternet. And a big question usually for Western brands that try to sell to Chinese usually is the question, which platform will they list? Will they go to Alibaba like Tmall, or will they go to, for instance, Jingdong, which is part of the WeChat and the Tencent ecosystem, right? And it really has big impacts, because that's exactly what the market regulators here are talking about. There is really unfair competition in terms of that the Tencent ecosystem doesn't allow any link sharing or any kind of checkout on the Alibaba side. So for instance, if I share an article about a nice product on WeChat and I want to make it, I want to sell it on one of the Alibaba platforms, on Tmall for instance, this is almost impossible. There are some workarounds in order to make this possible, but basically WeChat is kind of blocking the link that is going to Alibaba and so on. And so this is the big fight going on between those two ecosystems on the social media side, such as WeChat and versus Weibo, so Tencent versus Alibaba, and also on the e-commerce side between Jingdong, like Tencent, and as well as on the Alibaba side with Tmall and so on. So the regulators are saying basically here it would be better for the consumer if, for instance, they see an ad or an article on WeChat and they can buy it on Tmall. Or on the other way around, they can see an ad on Weibo, somebody talks about a product there, and then they can check it out in one of the WeChat shops or on the Jingdong platform. That is currently kind of impossible, and it's unfair, it's not good for consumers, but it's also not good for the brands. And so I think it's actually a good step by the regulators here of removing this wall. And now, of course, investors are kind of freaking out whether or not WeChat or Tencent will kind of lose their stake in the consumers which are in this walled garden, cannot go to the Alibaba ecosystem. And on the other hand, how much clients will, for instance, Alibaba lose through that? And my opinion is basically that this is good news. It's good news for the consumers and it's good news for the brands because it will make it much more frictionless. The advertisement, the conversion rates, I think, will be much better in e-commerce in the future if users can switch between those two ecosystems more easily. And so ultimately, this is the right move and it is good. Whether or not it will really have a bad impact on the bottom line of these businesses, I kind of doubt it because, people will not stop using WeChat for now. People will not stop shopping on Taobao and on the Tmall ecosystem really. So I think the FUD here might be a bit too much. Personally, I own just Tencent. I'm not doing anything about it because I got in quite early. I'm not owning any Alibaba. But as I mentioned yesterday, I do think actually the FUD is way overblown also in these big companies. But for now, I think the selling pressure may be just too much there. So to sum it up, yes, there is new fear, uncertainty and doubt around new regulations targeting the big tech, for instance. But if you read actually into the original sources and beyond articles like this, like for instance here Bloomberg, this one is about the China property management stocks like Beike actually selling off because, that was to be expected that China is also looking into the housing market. I mentioned that one yesterday. But if you look at more in the fine print and the details of the other crackdowns here, that are affecting now Alibaba and Tencent and also Meituan, I think there are opportunities to be found. And so coming back to the initial introduction here, yes, maybe crisis has two meanings, opportunity and danger. You just need to know where to find the opportunity and limit your risk in the danger zone. So I hope that's something that I can provide here on the channel. Please smash a like, share this video, leave a comment, and then thank you guys for watching and see you in the next one.